Welcome to this month's episode of Finding Perfect Property, where we discuss the ins and outs of purchasing residential real estate in the UK. I'm excited to have with us today Ben Handley, a tax expert at BDO, one of the world's largest accounting and consulting firms. Ben has extensive experience in helping clients navigate the tax implications of purchasing property, and he's here to share his knowledge with us today. Now, I know what you're thinking. Taxes are boring, tedious, and basically no fun. But stick with us because, as it turns out, understanding the tax implications of purchasing a property in the UK is actually really important. So sit back, relax, and let's get ready to demystify the world of taxes. Welcome, Ben. It's great to have you on the podcast today.
Thank you, Camilla. It's delighted to be here. And thanks for that lovely introduction with telling everyone how dull tax is. But as you say, it's so important. So hopefully we can enlighten people over the next 30 minutes or so.
Absolutely. I always love to start just by asking my guests a bit about their backgrounds and how they got into their jobs. How did you become interested in tax law specifically and advising clients?
All I ever dreamed of as a kid, Camilla. Well, I think from, I guess, my uneducated background, single parent council house, and I thought the only way to get out of it is to be a doctor, a lawyer, an accountant. And I thought, I'm too squeamish to be a doctor. I'm not posh enough to be a lawyer. And I was quite good at maths, so I think I'll become an accountant. So I stepped into the world of accountancy thinking it's all about numbers, but quickly realised it was all about law and tax law. So that's how I started my career, and I can talk further about how I sort of came to be involved in property specifically and so on. But
brilliant story. I'm sure you made your parents very proud. That's what all parents aspire, is for their kids to go to one of those industries.
I think she just wanted me out of the house.
Yeah. Can you explain to our listeners exactly what it is that you do at BDO?
So as you say, BDO is one of the world's largest professional services firms. So in the UK alone, we're about 7,000 people. We do everything from tax and accounting to advisory. So I'm part of the tax team at BDO, and I primarily look after private clients and clients with their business interests. But most of all, I look after real estate clients and their property interests. So I suppose throughout my 20-year career, it's evolved. But at a quick stage, I just love working with entrepreneurs and business owners. I just love dealing with the personalities. I love the relationships. I loved helping people. I love the fact they're passionate about what they do, and if I can advise tax, it goes nicely together. So I've always liked working with individuals, perhaps more the institutional side. And it quickly became apparent that real estate is such a rich subject when you're dealing with entrepreneurs and business owners, because it's either how they've made their money or having made their money, where they put their money. And then building off the back of that, nothing gives you a grounding in tax like real estate, whether it's trading, whether it's investing, whether it's personal, whether it's corporate, whether it's UK, whether it's international. You get such a grounding and such a rounding in tax by dealing with real estate. So I've loved it on a personal level, and I love it as a bit of a techie geek level too. Yeah,
and I guess, when it comes to advising successful entrepreneurs, real estate is just makes up such an important part of people's portfolios.
It's absolutely huge, as I say. If you look at the rich list, Sunday Times rich list, it's no surprise that a lot of people have made their money from real estate, and so many people have selling their businesses, or as a business has become successful, they want to diversify. They'll typically put it into real estate too. So it's just fundamental.
So you're in the best bit of the tax world.
Best bit of the tax world, and probably more fundamentally, I know what a building is. So that's what I like. I know some very clever people out there with all these algorithms and intangible businesses, but dealing with bricks and mortar and real people is brilliant.
Yeah, we're on the same page. I think when I think of my clients and their view on UK property tax, I think they've become quite confused and perhaps under the perception that we've become very complicated here in the UK. There's been so many tax changes to the way property is taxed over the last 10 or so years. You probably know exactly how many changes there are, but I'm sure the number probably falls somewhere between 15 to 20 changes. And it makes it very, very difficult for clients to navigate. What do you think are the main areas that clients need to think about before buying a property?
I think it's objectives and long-term view, really. Yeah, I think you're right about the changes, but most of the changes we've seen probably more have, there's been rate changes and tweaks around, certainly, but most of the changes over recent time have been to level the playing field between overseas investment and UK. So whereas in the past, overseas buyers could be protected from inheritance tax, could sort of transfer properties without capital gains tax, could pay lower stamp duty perhaps, just been a levelling of the playing field, which has introduced so much changes. And then of course compliance and regulation and transparency has been part of that as well. So I think it's take the long-term view, and when I look at property taxes, we always look at taxes on acquisition, taxes during ownership, and then taxes on sale. And if we don't pay enough taxes during our lifetime, then we think about inheritance tax when we die as well. Yeah. So they're the things, the broad spectrum, the things we need to consider when we're thinking about buying real estate.
What do you think? I think I know my answer for my clients, but what do you think is the tax that concerns, in it from a property taxation perspective, what do you think is the one that clients worry most about?
Most of my work is inheritance tax, yeah. I would say.
I agree.
It is because it is, people have done very well. It is hard work to build a property portfolio, but it is just one of those assets which is difficult to move, and it just doesn't avail of itself typically of the reliefs that other trading businesses might do. So anything above 325,000 is typically going to be subject to inheritance tax. So a lot of work, what I do is helping people when they're buying something, have one eye on the future to say, can we make it more efficient now? Or having developed their portfolio, what can we do to help, help preserve value and help you sort of pass that on to the next generation.
So there are things, the good news is there are things that clients can do.
There are things that clients can do, certainly.
Good. What do you think are some common misconceptions about UK property related taxes? Are there any?
I think UK investors and UK buyers buying UK property, it's relatively, people sort of broadly get it. I think the work I do is more educating around if there's joint venture structures, are we investing or are we trading? So is it income tax, is it capital gains tax? So there's educating people that. But I think there's still a misconception about overseas ownership or putting things through offshore structures. Now, sort of understandably, it comes from our offshore owners, and as you said earlier, there's been a lot of law changes over recent times to level the playing field. Whereas things they thought was the position is no longer the current case. But also, when you get UK investors to say, "Oh, I need to hold stuff off through an offshore structure, don't I? Because the big guys kind of do this," and that's quite often a misconception. And so we sort of have to reel back from that to start with.
Absolutely. What do you think is the right point in the process for clients to start thinking about taking tax advice? When should they start thinking about doing that?
Well, I'm going to say, you probably know what I'm going to say, as soon as possible, as early as possible. It's, with the best one in the world, it can be very difficult to give constructive advice at the 11th hour. When the deal is done, when contracts are exchanged, when something's happening, it can be that more difficult to say. So the earlier the better. The earlier you can think about, what am I buying? Why am I buying it? What are the long-term objectives? And you can get that advice up front, then all the better. Yeah. Because whilst we think about the likes of inheritance tax, which is something which is payable in the future on death, the more you start thinking about where I'd like my estate to be in time to come, the more you plan from that at the early days when the value is low before it grows, then all the better.
Good advice. I want to turn to the topic of structures and trusts. I think a few years ago, we sort of touched on this a little bit already, but most of our overseas clients would automatically think of setting up a structure to buy their property for all the reasons you said, sheltering it from all sorts of taxes, and perhaps they might register that, property, the company in the Channel Islands to buy their UK property. I think fast forward to today, and various tax changes that have come in have made it far, far less attractive for clients to set up those sorts of structures now for their UK property transactions. Do you think the day of the structure is dead? Is it over?
I think it's getting there, certainly, because I still often get inquiries to say, certainly from overseas buyers buying a UK property, we're going to use our overseas company to buy it. And so we pause there to say, well, you do know it's still going to be subject to inheritance tax. You do know you're still going to have to pay your SDLT. You still know you're going to, there's going to be annual taxes and so on. And so the sort of why go to the effort of running a company, administering an overseas company, if you're not getting the benefits that it purports to. There still might be reasons, and there's nothing against it. It's not illegal to hold UK property through offshore companies or offshore trusts, but there's a level playing field thrown for the UK company, and there's a lot more transparency on the way too.
So are there any tax benefits at all now for buying property through a structure? Does it make sense? Are there any situations where it still makes sense to do that?
There may be on occasion. I think they're on a bespoke case-by-case basis. But my tendency would be to start off with no. But then I think each transaction needs to sort of look on its own merits, and we'll take it from there.
I think for investors, it probably still potentially makes sense, doesn't it?
Yeah, for investors certainly. So for investors, it's very much your own home. Keep it simple.
Yeah.
That's all the advice I would ever give. Keep it simple. If you're going to buy it, live in it. That's the simple way. If you are buying to let, if you're buying an investment portfolio, then yes, advice should be taken. And probably I'd more typically advise you to buy that in a company for various reasons. But
yeah, good advice. I want to talk about purchasing property and, in prime central London, we still come across cases where high value property is owned in a structure. And that can be quite attractive for the buyer, because if they don't purchase the title of the property in the normal way, but instead buy the company, they can avoid a huge stamp duty bill. Do you think it's as clear cut as that? If you find a property that's owned in this structure, absolutely that's the way to do it? Or, what are the sorts of things you think clients need to think about before making a decision on whether to buy the shares in a company or just do a straightforward asset purchase?
I think the long term in the future, you're right. If you buy shares in an offshore company, the stamp duty position is very different to buying the title itself. But for the reasons we said, in terms of the taxes that happen, so you're not getting any other benefits that you would have done historically from owning that structure. You've got to operate that structure. If it's a home available for your use, we have this annual tax. And so, if you've got a £500,000 house, for example, that's £67,000 a year. You just have to have the privilege for owning in a company. So you'd weigh that up. And if you think about a future sale as well, is a future buyer really going to be that attracted to buying shares in a company? And the tax implications too. So if you buy those shares for £5 million, the base cost of the property within that company might be, say, £1 million. I'll give extreme examples. So if you come to sell that property down the road for £6 million, and the person wants to buy the property, not the shares, which is probably a reasonable assumption to make, their base cost is £1 million, not £5 million. So you're paying tax on £5 million, not £1 million. So I think you've got to weigh all that up. So don't be people might present it as a case to buy the company and for the stamp duty saving, but I would probably always get to a position where I'd suggest not doing it, but you need to weigh on that.
Yeah, of course you've got increased costs as well, legal costs, and increased time frame to do the transaction takes a lot longer. I want to talk about sort of the reputational side of that's associated with trusts and structures and offshore structures. Obviously, what I'm thinking about here is the Panama Papers and how that just blew up in the press, and I think it made clients very, very nervous about structuring after that happened. Are you now seeing clients become more hesitant about using structures as a result of what happened?
Well, I guess looking at trust specifically, first and foremost, they're a wealth protection, asset protection mechanism. And they've got a lot wider benefits. And so typically you think about divorce. You think about, yes, I want to put some money aside for my children. But as much as we love our children and trust them implicitly, we do worry about divorce and so on. And so putting assets in trust to protect them is just a sensible future estate planning thing. And in a UK trust isn't hugely tax beneficial. It still pays taxes when it sells the asset. You still pay inheritance tax. You'll pay 6% every 10 years rather than necessarily on death. And so I think there's still certainly a place for trusts. Structures, can be a sort of wide encompassing word, but I think if you are, just forming an offshore company to buy a UK property and it doesn't do with benefit, then no, I think those times are dead. But when we talk about structuring because we're building a portfolio of assets, we want to introduce other parties, we've got financing considerations and so on, then yes, of course, you do want to consider about the most appropriate structure to make it efficient now and in the long term.
I think that's really good advice. In terms of, if you do go down the route of, you've taken your advice and it turns out that actually the right way to make the purchase is either, through an offshore trust or setting up a structure, and that's fine. There seems to be a massive choice out there for clients in terms of the jurisdiction, where they register that company, and what, just the range of trustees out there, and the company can be registered in so many different places, ranging from the Channel Islands to the Cayman Islands. How do you advise clients on that side of things?
Again, bespoke to their circumstances. Like as we said, a UK person buying a UK home, we typically wouldn't be going overseas. An overseas investor coming into the UK, then maybe there does need to be something between them and coming into the UK. I think you just... through experience, there are certain places which just have very simple tax systems and you know what you are getting. Others, the beauty of BDO is we've got offices in 162 countries around the world, so if it does need to be somewhere else, then we can liaise with experts on the ground and get the local rules and kind of work it through.
I want to talk about confidentiality, because I think that's a really big one for high net worth clients. Anyone in the public domain, famous people, have in the past legitimately used structures, trusts to protect their identity. They don't want the general public to be able to look on a register and see where they live, understandably.
Yeah.
I think with changes that have come in, particularly, the new register for overseas entities, kind of taking that away, how do people legitimately protect their identity now so the general public cannot see where they live?
It's I think it's one of those that is going to need some further thought as we go through. So the register of overseas entities is brand new, so people start doing it for the first time from 31st of January now. From what I see, you don't have to disclose your home address on that. You provide it because I think the whole thing is around transparency to prevent money laundering, and so the powers that be can see where the assets are kind of passing and how they're funded and so on. But through Companies House, they don't, as a matter of course, share home addresses. So it still might be, with the register, we're still not openly opening the can to say this is my home address and this is where I live. I think there are kind of exemptions as well where there is a genuine kind of risk to a risk to people finding out where you live for whatever reason. Then there's probably some sympathetic reasons where it can be taken out from that front as well. But I think it's it's one of those that we buy our houses, the land registry. It's a bit of a more of an even playing field. But I think there will still be that disguise from you necessarily disclosing your home address.
I want to turn our discussion towards how buyers can plan ahead. We've talked about the best moment to get advice is right at the beginning, or as early as possible. What are some of the best planning opportunities do you think that individuals can consider before buying their dream home or investment? And I guess the advice differs, doesn't it, between someone buying a home or an investment?
It does. And I say home, keep it simple. I think that's straightforward. An investment or portfolio investments, it does become more interesting, and further thought can be given. Things like family investment companies. This is just a simple UK company. And how that might work is that parents might have initial funds, they might provide a loan to that company to buy property, but also children can take a share in that company and be entitled to some future growth. And so that's quite a, not an uncommon route of saying, well, okay, I want to seed some capital to help provide for my children and next generation. It still sort of preserves your initial capital, but then as future growth, as things grow, they can go to they can go to the next generation. People with, I don't know, property portfolio assets in personal names as well. There's there's a restriction on interest relief. Income tax is 45%, and so if you're not using that money to fund your lifestyle and want to reinvest, then consideration can be given to corporate ownership. And so transferring your portfolio from personal into corporate can be a sensible thing to think about too, certainly long-term tax-wise. And then again, other things will just be bespoke certain to the circumstances. But I say those, the more you are thinking long-term, where's the money coming from? Where's the exit coming? What do I want to do with that money when I make from it? Is then when we start thinking about structuring.
Yeah, so really important, I think, to take advice. There must have been pitfalls that you've seen clients fall into over the years. We've all been there, clients that think they don't need to take advice. They understand how the tax system works, and they've kind of got their idea of how they want to do these transactions. Yeah. Can you share some of the biggest mistakes you've seen clients do, obviously without breaking client confidentiality?
Without breaking, well, all my clients are very sophisticated, of course. But I think so the circumstances you do see is just ill advice, wrong advice, what we call golf club advice. Someone did this, someone assured me it's okay, and actually you end up with these fiendishly horrible structures where you're sort of damned if you do and damned if you don't. So where someone has been told to, okay, you need to buy this property through an offshore company, through an EBT type trust structure, it's they end up with punitive tax issues believing it there, and they similarly end up with punitive tax issues of trying to unwind the structure. So I think it's those where it's been ill-advised and there's not written advice which is not well thought through. Yeah. So I've come across those too many to mention.
I'm sure you have. Have you got a favourite case, or a challenging case, or something, a favourite situation that you've worked on over your 20-year career history?
I got a few, and it varies. From the one, we spoke to some guys the other day who were doing their first residential property development, and 3 guys coming together, and so the satisfaction you get about helping them navigate what they need to think about structuring and so on. But I think on the residential side, there's probably one particular property that sticks in my mind, that a property that was developed over a number of years and eventually sold for a 9-figure sum. An absolute beautiful building, and you went into the basement where there's this glorious ballroom, and then you pressed a button and the floor sunk into the ground to reveal the swimming pool. And so I think when you get to work on properties like that, and you've seen it throughout the development, and you get to have a tour of this wonderful building and then see it sell for such a price, it was quite an amazing property.
Amazing. In London?
In London.
At Blackbrick, we often deal with overseas buyers. I would say probably at any one time, at least 50% of the clients that we're looking after are overseas, looking to purchase real estate in the UK for all the benefits and reasons that we know about. Yeah. But across the pond in Canada, we've just witnessed the Canadian government ban foreign buyers from purchasing property for the next 2 years in an attempt to cool their property market over there. Do you think the UK might follow suit?
I can't see it. I'm a tax advisor, not a politician at the end of the day, but I can't see it for the foreseeable. I think if we look at the direction of travel, as I say, there's no prohibition on overseas buyers, on overseas entities, on offshore trusts acquiring property. The direction of travel is just to have more transparency and understanding of what's going on. The fact we have got a non-resident capital gains tax means fine. You can be non-resident and own a property, but the asset is situated here. You're making value from here, so therefore we want to tax it here. So I think I don't see a prohibition. I just see, as I say, it's just been a levelling of the playing field for overseas investors.
What do you think the key issues that will shape the future of UK property tax might be looking ahead? I know you haven't got a crystal ball. Well,
I think near term economy and general elections, certainly. How do you kind of stimulate activity and raise financing, yet still say we're open for business and attractive place to invest? and general elections, as you know, whatever we think, there's always going to be a bit of, you know, the mood of the people and what's going to turn the electorate. So I think they're going to be kind of near-term things, and you know, there is a increasing, you know, we want to get, you know, it's well popularised, isn't it, that younger people are really struggling to get on the housing ladder and get into first homes, and so something that, you know, more needs to be done. That certainly, you know, longer term, it's going to be, I think, generational attitude to wealth, and our favourite three letters, ESG as well. You know, when it's environment, social, and governance. So at the moment, you know, talk about environmental. So what pressure is going to be put on for buildings and things to be carbon neutral or carbon positive, the social economics of investing in property, and all these things are going to have a cost, they're going to have a bearing, and the younger generation as well. I when I started my career, it seemed, you know, wealth was a good thing, accumulating wealth, great, you know, and it's become a byproduct, I would say, of what entrepreneurs love doing. It's about what they love doing, and the byproduct of that is the success and the wealth. Whereas the younger generation, wealth is perhaps becoming a dirty word, it seems, and so actually I want to divest myself of that. I want to pass more to good, more for charitable causes, and so on. And so that's got to sort of play out on a bearing in terms of our, you know, people's approach to it and how long they want to hold things for.
Yeah, I think that's a really fair sort of look at where we're at. I think. I want to sort of end by asking you, what's the one piece of advice you would give to someone who's considering a purchase in the property world here in the UK?
I think take advice and keep records.
Yeah.
They're the two things. Just to say, to have a piece of advice that's written down that you can refer to, that you know what's coming. As I say, it might be very simple if you're buying you know, we're talking here about, you know, I wouldn't take advice buying my next house, but you know, if you're buying something 5 million, 10 million pounds, then certainly you want advice. Keep it simple. Don't let tax don't let the tax tail, you know, wag the dog, as we say, and do keep good records as well, because it might be home now, but you might let it out, you might do development, you might come to sell it.
Yeah.
The more records you've got about what you paid for it, what stamp duty you paid, what development works you did, and so on, then you know, the amount of cases you come across where you've tried to sell things and there's been patchy information. So they're simple bits.
Yeah, I think that's really, really good advice. I think I definitely agree with you in terms of the importance of taking advice from the right advisor, you know, whatever you're looking to do. But also, I'm quite a big believer in not letting tax drive your decisions.
Exactly right. Yes.
You know, particularly when it comes to property. I've had over the years clients say to me that they only want me to source them a property that's owned in an offshore structure, so they don't have to pay stamp duty.
Right.
And I just say to them, that is completely not the way to look at this.
Yes.
You know, there's no point in saving stamp duty if then that's not the right home for you.
Yes.
You know, fundamentally, we've got to be finding you the right home.
Yes.
And then if it's owned in a structure and it makes sense and we can do that, then maybe that's a benefit, a side product, but it shouldn't be the driver.
Agreed.
So I would kind of, I would say that's my top tip.
And you'd like to think these things sort of go into the commercial negotiation on price as well, really. And so you're going to pay what you think the property is worth, and if you include taxes, and if that doesn't stack up for you, then something else has to give.
Yeah, absolutely. Ben, thank you so much for coming on to the podcast today. That brings us to the end of this month's episode of Finding Perfect Property. Thank you to Ben from BDO for joining us and sharing his expert insights on the tax implications of purchasing UK residential property. I hope our discussion has been helpful in demystifying the often confusing world of taxes and given you, our listeners, a better understanding of the important considerations you should take into account when making a property purchase in the UK. We hope you'll join us again soon and look forward to sharing more expertise from across the UK real estate market. For more information about how to purchase property in prime central London, please get in touch via our website. And don't forget to like and subscribe on whichever podcast channel you use to listen. See you next time.